this video, I'm going to demonstrate our make or buy decision. So we've been approached, we're currently making a certain fixture, and we've been approached by an outside supplier to offer to sell us this for $20 for fitting. Our cost accounts have calculated what they believe is our manufacturing cost of materials of $640 per unit, labor of $480, and manufacturing costs, both fixed and variable, of $1440 for a total manufacturing cost of $2560. On the surface, this seems like a no-brainer. We're spending $25.60 internally to make it. $20 we could buy it from the outside supplier. Let's just jump and say $5.60 per unit and buy it from the outside supplier. The problem is some of this manufacturing cost may not be relevant, meaning it may not necessarily go away even if we buy it from the outside supplier. So let's go through the calculation and compare our different costs of continuing to make it versus the alternative of buying it. Well, the easiest part is to look at, if we buy it, what's it going to cost us from the outside supplier? $20 per unit times 3,000 units, 60,000, so it's a $60,000 difference. Now, before I jump into the material, labor, and variable overhead, I'm going to be kind of anti-accountant-like and go to the end. Let's look at fixed overhead, and this is probably going to be the confusing area. Of that manufacturing overhead of $14.40 per unit, they've identified that $480 of it is variable overhead, and the variable overhead is going to go away if we don't produce the units. It's the definition of variable. It changes based upon the volume. So if I take the $1440 minus the $480, that's going to give me the total amount of fixed costs per unit. But they've also said that even though fixed costs usually don't change, 1/3 of the fixed overhead will actually go away if we buy these from the outside supplier versus making them. Now, no, fixed costs don't usually change, but this might be something like there's equipment rental or something that doesn't need to happen if we're no longer making this, or a supervisor, that we no longer need to pay their salary. So I'm going to take the $1440 minus $480. That's going to give me the fixed cost per unit. I'm not multiplying it times a third because a third of it's going to go away. The other 2/3 isn't going to go away, so it's still going to be there if we buy the 3,000 units. So 1440 minus 480 times 2/3 times 3,000, 19,200 in fixed overhead that's still going to exist if we buy it. Total cost to buy, 19,200 in fixed overhead plus 60,000 outside purchase price, so total cost would be 79,200. Well, let's look at the fixed costs in total if we make it. It's going to be the $1440 total manufacturing cost minus the $480. Again, that's the variable portion of it, gives us the fixed cost per unit. I'm not multiplying it times anything at this point of a third or 2/3 because we're talking about continuing to make it. I'm going to multiply it times the number of units at 3,000 for a total fixed overhead of 28,800. Now, I'd pause the video here and make sure you can work through the material, labor, and overhead. Let's go ahead and show these numbers. To make it, $6.40 in material cost. That's going to be a variable cost times 3,000 is 19,200. Direct labor is also going to be variable. 480 times 3,000, 14,400. Variable overhead, remember, manufacturing overhead is total overhead of 1440. They've identified that as 480 times 3,000 units is 14,400. Adding those three variable costs to our fixed cost of 28,800, we get a total cost to make it of 76,800. So now when we look at the difference, it really costs us 76,800 to make it, but on the other hand, it's going to cost us 79,200 to buy it, because even though, yes, it's relevant, the outside purchase price, but there's still going to be some fixed cost that's going to exist irrespective. So our cost would actually be $2,400 higher if we buy it. So it doesn't make sense to buy it. We would continue to make it because our cost would be $2,400 lower if we continue to make it. Now, another part of this scenario is, what if part of the cost we're currently considering is volatile? They mentioned here that while currently our material cost is $6.40, there's some volatility. So what we're trying to consider is, how high could that material cost go above the $6.40 before we're just indifferent between making and buying it? How far would that go? So what we can do here is just take our original $6.40 and then take a look at the cost difference we currently have between these two, which is 2,400, divided by the 3,000 units that we're talking about. 2,400 divided by 3,000. Add that cost differential to the current $6.40, and the material cost could go up to $7.20 for us to be indifferent between making and buying.